Navigating taxes as a freelancer or gig worker can feel overwhelming, but it's essential to stay on top of your obligations and maximize your earnings. Unlike traditional employees, freelancers handle their own tax withholdings, self-employment tax, and quarterly estimated payments. The key to success lies in understanding your responsibilities, keeping detailed financial records, and taking advantage of deductions that can lower your tax bill. Whether you're driving for a rideshare company, freelancing in a creative field, or offering services online, mastering the basics of self-employment taxes ensures compliance and keeps your finances on track. Let's dive into the details. Today we will talk about how to handle taxes as a freelancer or gig worker. So before we start, make sure to hit the like button and subscribe to my channel. Understanding your tax obligations. 1. Self-employment tax. Freelancers and gig workers are subject to self-employment tax, which covers Social Security and Medicare contributions. The self-employment tax rate is 15.3%, 12.4% for Social Security, and 2.9% for Medicare. Unlike traditional employees, freelancers pay both the employer and employee portions of these taxes. However, you can deduct the employer equivalent portion, half of the self-employment tax, on your income tax return. 2. Income tax. In addition to self-employment tax, you'll pay federal, and in many cases, state income taxes on your net earnings. Your income tax rate depends on your total taxable income for the year, including income from other sources. 3. Quarterly estimated taxes. The IRS requires self-employed individuals to make estimated tax payments quarterly if they expect to owe more than $1,000 in taxes for the year. These payments cover your income and self-employment taxes and are due on April 15, June 15, September 15, and January 15 of the following year. Keeping accurate records. Proper record keeping is essential for freelancers to track income, claim deductions, and prepare for audits. Keep detailed records of income. Save invoices, receipts, and payment confirmations to document your earnings. Expenses. Track all business-related expenses, including receipts and bank statements. Tax forms. Retain copies of 1099 NEC forms provided by clients who paid you $600 or more in a year. Even if you don't receive a 1099, you're required to report all income earned. Using accounting software like QuickBooks, FreshBooks, or Wave can streamline the process and ensure you're prepared for tax season. Identifying tax deductions. Tax deductions can significantly reduce your taxable income, saving you money. As a freelancer, you can deduct the following expenses, provided they are ordinary and necessary for your business. Home office deduction. If you use part of your home exclusively for business, you can deduct a portion of your rent or mortgage, utilities, and maintenance costs. Internet and phone. Deduct the business use percentage of your internet and phone bills. Supplies and equipment. Office supplies, laptops, software, and tools specific to your trade are deductible. Travel and meals. Business-related travel expenses, including transportation, lodging, and 50% of meal costs, are deductible. Education and training. Courses, certifications, and workshops that enhance your skills are eligible deductions. Health insurance. Self-employed individuals can deduct health insurance premiums for themselves, their spouses, and dependents. Ensure you have receipts and proper documentation to substantiate these deductions in case of an audit. Navigating tax forms. Freelancers and gig workers typically file taxes using these forms. Schedule C, Form 1040. Used to report business income and expenses, calculating your net profit or loss. Schedule Southeast, Form 1040. Used to calculate self-employment tax. Planning for taxes year-round. 1. Set aside a portion of income. A general rule of thumb is to save 25 to 30% of your income for taxes. This ensures you have funds available for quarterly payments and your annual tax bill. 2. Open a separate business account. Using a dedicated bank account for business transactions simplifies tracking income and expenses. It also provides a clear paper trail for tax purposes. 3. Hire a tax professional. A tax professional, or CPA, experienced in working with freelancers can help you identify deductions, ensure compliance, and avoid costly mistakes. They can also assist in tax planning and preparation, managing taxes for gig economy workers. If you earn income through platforms like Uber, Lyft, DoorDash, or Airbnb, you are considered an independent contractor. Gig economy workers face unique tax considerations. Platform-provided tax summaries. Many gig platforms provide annual tax summaries or 1099 forms outlining your earnings and fees paid. Vehicle expenses. Deduct vehicle-related expenses for business use, such as mileage, fuel, and maintenance. Use apps like MileIQ to track mileage accurately. Service fees. Fees charged by platforms, such as booking or transaction fees, are deductible. Avoiding common tax mistakes. 1. Failing to pay quarterly taxes. Missing quarterly tax payments can result in penalties and interest. Set reminders or automate payments to stay on track. 2. Not keeping receipts. The IRS requires evidence for claim deductions. Use digital tools to store and organize receipts. 3. Misclassifying expenses. Ensure expenses are categorized correctly to avoid scrutiny. For example, differentiate between personal and business use of your car or home. 4. Underreporting income. Report all income earned, even if it's cash or below the 1099 threshold. The IRS cross-references 1099 forms, so discrepancies can trigger audits. Leveraging tax-advantaged accounts. Freelancers can reduce taxable income and save for the future by contributing to tax-advantaged accounts. SAP IRA. A simplified employee pension IRA allows high contribution limits, providing significant tax savings. Solo 401. Designed for self-employed individuals, offering both employee and employer contribution options. Health Savings Account, HSA. If you have a high-deductible health plan, contribute to an HSA for tax-free savings on medical expenses. Preparing for tax season. As tax season approaches, gather all necessary documents, including income records, receipts, and prior year tax returns. Double-check deductions and credits to ensure you're claiming everything you're entitled to. If you're unsure about any aspect of your taxes, consult a professional to avoid errors and maximize savings. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.